So good afternoon, everybody. This is the last conference for the pavilion. We've got an exciting topic, and I use those words, and then I'm going to turn around and say we're going to talk about insurance. So I've got Ben and Patrick with me. If you can introduce yourselves, let's start with Ben.
Yes, thanks for having us today, Chris. And the comments were great. Everything at TBT has been wonderful. Ben Slegis here with Lockton. We are an insurance broker, one of the largest privately owned brokers in the world. And my role within the company is working on a team that specializes in digital asset insurance. So work with a number of individuals and companies within the digital asset ecosystem, but specifically for this conference, a number of miners and data centers.
I'm Patrick Datz. I'm a Senior Vice President at IMA. Similar to Lockton, we are one of the larger privately held brokers. And internally, I help lead our digital risk practice. We have a team of about a dozen that specifically focus on a multitude of risks within the space, from miners, exchanges, metaverse, protocols, kind of a wide variety. But, it is a growing space, and as exciting as insurance can be, it's never a dull moment.
So let's start off with the basics. First of all, why insurance, and what should you be looking for in a broker and your policies? Patrick?
I think the big thing, and I think one thing that's really important within the digital asset space, is just having a broker that understands what you're doing, whether you're a miner, you're a data center, you own something in the metaverse. It's just so unique to insurance of those various risks, and there's not a lot of carriers that really understand the space. And so by partnering with a broker who kind of knows what to look for and can advise you correctly, I think that's really important, because if not, then you can be led down the wrong path. When you have a claim, it's not covered, and you spend all this time paying insurance, and then people get that feeling of, wow, insurance is a scam, it's a waste of money. So it's really important to partner, just like you would in any other vertical within your business, an attorney, a CPA, of someone who really understands your business.
Yeah, absolutely. I think Patrick absolutely nailed that. But it's a broker that has invested, capital to understanding the risks, understands the marketplace, understands the carriers that operate within the space. And then I think another thing Patrick hit on that was really important is that understands the claims process as well, that has gone through the claims of digital asset companies, that understands the pitfalls that they face, and understands the claims teams of the carriers that are there. Because, as Patrick said, you're paying all this money for this insurance. If an incident happens or you need your broker to be an advocate for you, they need to understand the nuances that specifically a data center or Bitcoin miner could face, so they could speak to it and advocate for you correctly on the carrier side as well.
In terms of policies and the carriers themselves, we were talking about this a little bit earlier. There's been an evolution over the past few years. Bigger carriers coming in to kind of handle this. Patrick, we'll start with you. It's like, okay, why are the bigger insurance carriers coming in? What is the value and benefit to having those larger carriers step in?
Yeah, I think one, from the consumer standpoint, just having more carriers in the space is going to create more competition. And I just think as we look throughout this conference and what conferences in the past have looked like, it's just the space, I think, has really grown up, and I think insurers are getting much more comfortable with the risks in the space. And I think what we've been telling insurance carriers for a very long time, as it relates to Bitcoin mining, for example, that these are great facilities. They're often new construction. They're not in old, decrepit buildings, which you look at a lot of traditional data centers are. You have wires hanging everywhere, where these new facilities are great builds, and carriers just need to get past this scary word of Bitcoin. And I think with the recent election results, the run that Bitcoin is on right now, and the regulation that's moving forward, more and more standard carriers are going to come into the space that you would see, on Sunday during a football game advertised. And I think also, too, it's been great to have specialized carriers come into the space that really understand the nuances of the business. And ultimately, as brokers, and whether it's IMA or it's Lockton, we just want to give our clients an opportunity to have various options to move forward with, where in the past they had one option. It was a really expensive option and not a great option. So it's just really grown up a lot.
Yeah, if I could just add on, I just think the additional capacity that comes in space just creates economies of scale, and the people that benefit for it are at the end of the day the consumers. So it is the miners at the end of the day that have matured, and it's the education that carriers are putting in to understanding the space, understanding that Bitcoin isn't this scary world, and that there are mature companies that have hiring people that from the traditional financial side now that are sitting on their boards. C-suites are coming in and really shoring up what the balance sheets look like, the risk management protocols and practices that they have, that the facilities face. And there's some of the smartest people in the world that are working with data centers in the Bitcoin mining space. And they're the ones that, if they're looking at risk and understanding how to analyze it, they're probably the ones that are leading that front. And it's just getting those carriers to understand it. And I think it's been a credit to a lot of the specialized carriers in the space. Some of them are here today, but all that has allowed the traditional finance company or traditional carriers to understand it as well.
So both of you referenced at some point in time, once you get past that scary word of Bitcoin, what is it that makes it scary? Is it the FTX dynamic? Is it the stereotype of the the miner that's there on Monday and gone on Wednesday? Is it all of that? Is it more to that? Financial instability, volatility of the commodity itself?
Yeah, I mean, I think I talk about this probably too much, but I do think FTX is probably one of the best things to have happened because it really weeded out the bad actors. And if you really look at it and boil it down to it, it's just boilerplate fraud at the end of the day. And so I think getting carriers to really understand that, like it was a bad company, but it was or poorly run, but it was just fraud. It could have happened at a non-digital asset exposure, and just having carriers sort of understand what the real risks are. At the end of the day, like helped out the industry, and really maturity has happened within the space.
In terms of the maturity, I mean, now we're talking about some of these miners, they're public companies. I mean, they are, this isn't somebody mining in their garage. This is somebody building $500 million facility, right? And so now all of a sudden, I mean, something like that, it seemed to me that the really big carriers are starting to lean in.
Yeah, no, I would agree. I think some of the largest property carriers in the world are starting to take notice. I think with the size of some of these facilities, and I think also B, with this crossover now with Bitcoin mining entering into the HPC and AI space, which has long traditionally been not or a space that carriers like to play in, right? Like a traditional data center. And again, it goes back to what I said earlier. Our big pitch to the carriers is, there's really no difference from an underwriting standpoint of Bitcoin mining and a traditional data center, so you shouldn't be treating it differently. But I think back to one of the points you made earlier, insurance is an industry that uses hundreds of years of actuarial data. And, all things Bitcoin and all things digital assets very similar to the cannabis industry, which we've seen, start to mature a little bit from an insurance standpoint, but it has a lot of the same characteristics where they just don't have the data. So, carriers, as you can imagine, their insurance, they're risk adverse. They're going to, limit their capacity, and they're going to charge slightly more money until they start to get more and more data. But I think what we've seen early on is, there's been very few losses, at least on the property side, and that's, I think, due to like really world-class facilities being built, and as Ben mentioned, very intelligent people behind the scenes from an engineering standpoint to make these facilities not incur a lot of losses.
So with these larger carriers, and with what I would assume comes with that is greater competition. I would assume that rates are going down. Is that true?
Yeah, I think listen, it's always case by case. So every risk needs to be looked at with also within a vacuum, and what the risk protocols look like, what makes a good risk, what doesn't. But I think there's been a lot of evolution in the data center and mining world, and there's been a ton of risk protocols and procedures and management that have been put in place that, yeah, there is more competition and rates have come down over the historically last few years. So whether it be the D&O or property rates, or we're starting to see those really get more competition in the space, and it's driving them down.
Yeah, and I would just say, and I think not only are the rates going down, but I think Ben mentioned earlier, capacity is going up. And so what is capacity? It's just insurance limit. So I think as you look that, a lot of the miners or even the new data centers that are, breaking ground, a lot of them are in Texas, and Texas has cheap power. But, where that can cause an issue for insurance carriers is, if you look at a site in like Rockdale, where there's two very large publicly traded miners who have facilities very close to each other with limited capacity, that can create an issue because they're both trying to capture a lot of insurance limit, but it's in a very confined space. And so in the past, when you've had limited capacity, that can be very difficult for the insureds. However, now with more capacity coming to the space and more limit being unlocked, it makes it easier for everyone. And I think with traditional capital coming in on this current bull run, they're going to want to see more traditional insurance in place, and it's just going to be an easier process for everyone.
So you both mentioned just recently, the risk factors involved. So what are the things that I should, and we talked about this a little bit earlier, what are the things that I should be looking at? Obviously D&O, but what else is out there? What else is there in terms of high risk, right? That drives those rates up because there's uncertainty, because this is still relatively new to many of them.
Yeah, absolutely. I think the coverage that most of the clients that we work with are that look at, D&O, absolutely, property, GL. I think one of the more struggles in the space has been
And GL, general liability.
General liability, apologies. One of the biggest struggles in the space has probably been the business interruption piece. So rig goes down, they can't mine. How do you quantify a miner that can't operate and can't mine? And we've seen, a few carriers really trying to understand this, rate to it, and offer solutions for that. So that is probably the biggest piece that has evolved for miners right now that they can secure. And while, as Patrick mentioned, capacity for that is still quite low, I think that's the space that will evolve the most in the next few years for miners, and it's solutions that they have now today that they didn't have in the past few years.
Yeah, I would agree with that. I think that's been our biggest battle from the broker side of trying to push our carrier partners of offering that the business interruption piece of it. And again, I think as more individuals come in to sit in these C-suites of these, publicly traded miners, privately held miners, one of the first things they usually say is like, why can't we get business interruption? Every other industry, every other vertical I've ever worked in has had it. And again, I think it just goes back to the data. And then, what they're trying to value is a very volatile asset that, can go up and down very frequently. But again, I think we are seeing some carriers start to offer terms, as Ben mentioned. And again, I think that's going to breed competition amongst the carriers, which again is great for everyone. And I think this thing is moving so quickly that carriers are going to figure it out sooner rather than later. But I think another point that I would bring up is what can you think about when you are developing a data center? And an insurance policy is an insurance policy. We talked about a little bit earlier that you want to work with a broker that is going to understand and help you through the process, whether that's IMA or it's Lockton. But I think one of the big things is what can my broker help me with that isn't within an insurance policy? And so loss control, we mentioned earlier, using a broker that can send someone out to the site to kind of walk through it with you and say, hey, these are what insurance carriers are going to look for. These are the best practices. And, while we're not trying to teach you how to build a site, we're just offering another opinion from our point of view, which in turn will hopefully help reduce any future losses and also, help keep rates down and premiums consistent.
So what I just heard from there is the sooner, as I'm building and developing my facility, the sooner I get you involved, then you may be able to make recommendations that will lower my risk and therefore lower my future premiums, right?
Yeah, I would agree with that. I think the sooner you engage a broker, whether it be Lockton or IMA, that understands the space, understands the pitfalls that a miner faces, the sooner they get in, if it's a new project or if you're want to go in a different direction for your miner or a new site, the sooner that you engage a broker that can run a good process, introduce you to carriers that also understand it from their perspective, and as Patrick mentioned, offer assistive loss control services, the better position you'll be when you go to market, when you try and get quotes, the more competition that a broker can drive.
In terms of along those same lines, are there states, are there areas, I mean, that are more insurance friendly in terms of rates, because of legislation, because of other issues out there? Are there areas that you would recommend avoiding or going to?
Yeah, I mean, I think stay away from California. I would stay away from Florida. But I think the data center Bitcoin mining space naturally is not going to go to those states. So I think a lot of the natural areas where miners would go are fairly insurance-friendly places, right? Like West Texas, where you do have some wind concern, you do have some hail concern, but for the most part, it's not terrible. Obviously, when you're looking at Texas, anything coastal can be difficult. So Houston, Corpus Christi, kind of that area, it's not uninsurable. It's just a little bit more expensive. I think there are some miners that are starting to plug in Oklahoma and put up sites. That can be a little bit difficult from a wind standpoint. But I think again, naturally, where a lot of mining companies want to go are usually fairly pretty insurance friendly places. Now, if everyone starts going to San Francisco, I think that's going to be really tough. And you can send all those to Ben to try and figure out. But yeah.
Really good point, and we won't turn anyone down. Everyone needs insurance. San Francisco might be tough, but I think another point too is, and I know we talked about this when we spoke last week, but miners are always going to flock to cheap power. So wherever they can get the power, that's the biggest driving factor is the power right now. So regarding the regulation, or if there's a sites that where you shouldn't go, absolutely location, wind, any natural disaster should be looked at, but it's also going to be states that are very energy friendly. So and we've seen that, obviously, Texas being one of those. But cheap power is always going to be a big driver for them.
Are there? I mean, look, here in Texas, we're getting ready to start a legislative session. There's all sorts of bills being talked about, here in the state, right? All sorts of potential federal legislation that's being bounced around now. I haven't heard anything specifically related to the insurance. Have you all heard of anything that would specifically relate to the insurance?
I have not. But again, I think regulation in general is gonna help insurance, right? And I think the more regulation from the state or the federal level is going to get large insurance carriers more comfortable with the risk, right? Because when it's being regulated at a federal or state level, insurance companies are going to take comfort in that and knowing that there's some framework behind that, so they can accurately, underwrite the risks and broaden their appetite and enter in the space. So I think from an insurance standpoint, more regulation can be beneficial. And just provide, again, more comfort and solace for the carriers.
Yeah, if there's one thing insurance carriers like, it's regulatory clarity. So I absolutely agree with that. And the other thing they like, which Patrick mentioned earlier, is data points. So two things that sometimes struggle within the digital asset ecosystem. But
there have been a couple of sessions during this conference about consolidation of the industry, right? I think on the last one they were really talking about the hybrid facilities with HPC and mining facilities, and sort of the general mood is that this is the maturing of the industry. And so as it matures, as it consolidates, then that means that wouldn't that mean that there are fewer data points coming in, or does it mean that they are more comfortable with the data points coming in because now it's a public company versus Chris Schein running it out of a 100 megawatt facility out of a shed, right?
Yeah, I mean, I think it's a fair assessment. But again, I think what our job is, what Ben's job is when we're working with our carriers is really pitching the deal to the carriers and saying, hey, this is why this is a great risk. And so if it is Chris and you're running 100 megawatts out of your shed, like we'll do our best to pitch that to the carriers of like, hey, this is why we think this is a great risk. This is everything that Chris is doing to mitigate any losses. And again, I think it goes back to the very beginning of that's why it's really important to work with a broker who understands the space, because we kind of know what levers to pull when working with the carriers and highlighting certain things and helping you improve things that you aren't doing well. But again, I think as it relates to Bitcoin mining specifically, it's from an insurance standpoint, such a very property-driven exposure. When you have miners with hundreds of thousands of machines scattered across different sites and containers and transformers and substations and everything that goes with it, I think just whether there's M&A activity or not, the more data that we get year over year of, okay, here's another year, the industry's placed, $10 million of premium and we've had 0 losses, or we've had, $2.5 million of losses. Why did it occur? Okay, that was unavoidable. And then again, it's just more and more data that allows everyone to get more comfortable.
Yeah, and I think it also goes back to like the work that Patrick and so IMA and Lockton do every day is educating the carriers and making sure they're aware of what's going on in the space. And absolutely, they need the data sets. They need just the longevity of the industry. And it's going to just drive that competition. But it's making sure the carriers understand it, and that's on the broker, and that's on Lockton, that's on IMA, and it's something that we do constantly.
All right. Is there anything that I haven't asked that we ought to bring up for our folks here?
I mean, I just think when you are starting a facility or you own a facility, I think it's important to, partner with someone just like you would be from a CPA legal standpoint who really understands the space. And there's just a lot of coverages out there that, are either A, really applicable to your business, or B, that, you may be applicable to a past industry that you've been in, but you necessarily don't need in this new venture. And I think, as Ben mentioned earlier, the market is softening. We are seeing rates improve and capacity increase, which again I think is really great for everyone because it's going to provide a lower cost of entry just in general. So, like we get it. Like insurance isn't the most fun thing to talk about. It's not the most fun thing to spend your money on, but it's really important at the end of the day because if and when something goes wrong, whether it's a tornado comes through or something doesn't go as planned within your business and you get sued by investors, you really want that insurance to respond how you think it's going to. And by partnering with a broker, again, whether it's IMA, Lockton, whoever, who understands that space, I think it's really, really important.
Yeah, I think you just nailed that, Patrick. And I would just say, and I know we talk to miners every day that might have looked at the coverage 2 years ago, 3 years ago. It was really expensive. The coverage was more minimal than they thought it would be. I think it's time for them to really look at it again, and because the marketplace, the competition, the capacity are there, and it still has a long way to go, but the evolution has definitely happened in the last 3 years, and especially I would even say probably more so even the last year and a half. So, I think looking at your holistic view of the organization and understanding the risk and working with a broker like IMA or Lockton, now is the time to really focus on it.
All right. Ben, Patrick, thank you very much for sharing your expertise. Thank you all for joining us this afternoon, and I hope you enjoy the rest of the conference.
Thank you.
Thank you.